Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for December the 6th, 2011. Now, as we continue on into December trade, we're going to have a very volatile, choppy month with problems in Europe, a number of issues on the table here, problems in Iran, all kinds of things can happen here. So it's certainly a month where you would limit your trade. Now, looking at things, I do expect a little bit more of a rally in the equity markets. So we're looking at the iShares, the Japan IDX, the EWJ. Now, this is bottomed out down around this $8.80 mark. So all of our stops, of course, are going to be below what I think will be a double bottom right here. And we're going to use this buy signal from Vantage Point to continue. Hopefully, what we're going to see is a continuation of this current move towards $10, $11 per share, which I think is reasonable. Now, when we break this down by crossover, we can see our key level now is 924. That's our base level of support. We want to see the market stay above this particular area. We then start breaking this down per crossover. So when we look at this, we can see the short-term crossover. We have the double candle and then the short-term crossover from Vantage Point moving up. This was followed by the predicted MACD and the predicted TSI. Now, this is very slow moving, but again, if you're picking up 60, 70 cents per share on an index like that, on a share that's less than $10 per share, an ETF that's less than $10 per share, it's a very good move. Now, when we look at the medium-term crossover, we can see that that's also confirming, and of course, the long-term crossover is about 3 days old. Now, we're getting a little bit overbought on the predicted short and medium-term basis. You can see the short-term predicted difference moving back down, but the predicted medium and long-term difference continue to push higher. So from here, what we're going to do is break this down and come down into our daily report and see if we can fine-tune this entry a little bit more. So we have 929, 943. So even from a day trading perspective, if you're picking up 20 or 30 cents per share on this ETF, that's a pretty good trade on a $10 ETF. Now the Neural Index is down. We've had several up days, so it's perfectly normal for this thing to correct lower. When it does, we're going to use that as a buying opportunity. So 929 for our day traders are going to, and 943 is our range. And for medium and longer term traders, I think it would be reasonable that potentially we could get back towards that $10 share. Now, since we are relying on the predicted high and low from Vantage Point, let's just see how accurate it's been. You can see that the market is basically staying within the Vantage Point predicted ranges, and it's actually consistently breaking above the Vantage Point predicted high, even for the last 2 days. Now, we've had a bit of a flat day. The market's a little slow today, but I think that'll get going tomorrow. So this trade does look like a decent trade going, not just on a short medium term basis, but potentially for a longer term basis also. Now we can see we've got some just recently here at the end of October, beginning of November, we were at $10 per share on this particular ETF. So I really do like this particular trade. Now, that's our first trade for tonight. Now, our second trade is going to be in the Forex market, specifically the US-Canadian pair. Now, this trade is going to be a tricky one, and I'll let everybody know it's not for the faint of heart. We're going to be looking at long positions here. Our indicators are telling us that we're going lower. Now, what we're doing is playing an oversold condition and a corrective move. The Bank of Canada out tomorrow. There's going to be volatility in this pair. I don't think that the Bank of Canada is going to do anything to help the Canadian dollar. The last two unemployment reports from Canada, horrible. Canada is employment situation is actually worse than the U.S. People associate the Canadian dollar and the Canadian economy as booming. It's not. I'm in Canada, and I can assure you that that is not the case. In fact, it's the exact opposite. We can see very little growth, no job creation, low interest rates. I wouldn't surprise me one bit if Canada cuts rates in the near future, because they certainly won't be raising them anytime soon. So the fundamentals are really stacking up against the Canadian dollar here, to say the least. Now, we've got an oversold condition. We're going to play this. It is highly correlated to the equity market, so you wouldn't want to do both at the same time. Now, when we look at Vantage Point's predicted ranges, you can see that it's repeatedly broke through the Vantage Point predicted low. But now all of a sudden you can see that that's not happening, and we're starting to see some green candles. 2 days in a row, they haven't been able to break through the vantage point predicted low. This, in my opinion, opens a move higher back above 102 after a minor retracement. Predicted MACD and predicted TSI not overly supportive of this trade, but we are above the zero line on the MACD. Now that's something I want to point out here, that until we cross this, we're not going to get overly bearish, and we could break back up very soon. You can see a similar situation right here where we just slipped below that predicted MACD, and then the market turned and went higher. So we're going to play that same scenario. Now, looking at the short-term crossover, you can see that the predicted moving average is flattening out. Predicted medium and long-term differences still pointing lower. So we could still see some more downside, but I'm not convinced that that's what's going to happen here based around those predicted differences. Now, when we look at our range tomorrow, we have 101.29, 102.34. This is the range we're going to play. Very important to point out, the neural index after multiple down days is turning positive. So whatever the program is picking up on, if we work in basic fundamentals of what I think is going to, the Bank of Canada is going to say tomorrow, I believe they are going to crush the Canadian dollar. And it wouldn't surprise me if they're doing that a little bit on purpose to try and weaken the Canadian dollar to get our economy going again, to jumpstart it, because it's in really pretty rough shape. So when we put all these strong technicals and some of these basic fundamentals with the Bank of Canada, the unemployment rate, it doesn't really suggest that we should be getting overly short on the US-Canadian pair. And in actual fact, we should be looking at longs. So with that said, these are the market positions for December the 6th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.